Good afternoon, everyone, and welcome to the 2021-2022 financial year annual members meeting for My Life, My Money, which incorporates Catholic Super, My Life, My Pension, Transport Super, and My Life, My Super. My name is Danny Casey, and I'm the chair of the board, and it's my great privilege to be chairing this meeting this afternoon. Joining me today is our Chief Executive Officer, Scott Cameron. We also have our Chief Investment Officer, Andrew Howard, with me this afternoon. We've been looking forward to the opportunity to brief you, so we will work through a plan where I will make some introductory remarks, Scott will make some further comments, Andrew will comment on investment performance, and then we will take some questions. But we have board members and executives attending today's meeting, and on behalf of our colleagues who work and serve you, our members, we give you a very warm welcome and thank you for taking the time to join us. I'm pleased to confirm that we do have a quorum of directors as well as our auditor present. So as such, our annual members meeting is now officially open. Now at the start, it's important to note that the information in the presentation is and must be general in nature. So it relates to the fund as a whole. It doesn't take into account your personal circumstances, such as your individual investments or your financial objectives. Obviously, if you'd like individual financial advice, we have financial planners who'd be very happy to assist you. Their contact numbers will be included at the end of this presentation. But I'd like to begin today by acknowledging the traditional owners of the land from which I'm chairing this meeting today, the Wurundjeri people of the Kulin Nation. I pay my respects to their elders, past, present and emerging, and the First Nation elders of other communities who may be joining us today and all around Australia. In today's meetings, as I mentioned, I'll make some opening remarks on behalf of the board. Scott will then provide an update from behalf of the executive team, and Andrew will cover investment performance for the financial year 2022, the current investment outlook and what that means for you, our members, and for the fund. But we will have time, and we're looking forward to responding to the questions that we've received from our members prior to this meeting. It's encouraging to see such a level of interest and engagement from you, our members, and we're pleased to have the opportunity to respond to your specific questions. Now, you can also ask questions during the meeting. There's an Ask a Question function, which you'll see in the top right of your screen. But if you're asking a question today, again, just another reminder, it can only be a general questions about My Life, My Money, which includes the Catholic Super, My Life, My Pension, Transport Super, or My Life, My Super. And again, if you have specific questions about your personal account or your circumstances, then please call our service centre number and we'll have that again listed at the end of the presentation. Now, as you may not have time to answer every question today, written responses to each question and the minutes of this meeting will be made available on your Super Fund's website by early April. I'd also like, before I start with some introductory comments, to introduce our current board members who are shown on the screen here. The past financial year from 2021 to 2022, we had 9 people serve on our board. All of our board members bring vast experience, technical skills, and a strong commitment to our values, a real passion for serving our members. The board has 3 employer representatives, 3 member representatives, and 3 independent directors. As mandated, the chair is a board-appointed independent director. I think this mix allows flexibility to attract and select high-caliber people who, as a minimum, meet all the standards required by legislation but have a deep commitment to serving you, our members. So together, our board, management, and our dedicated team maintain a razor-sharp focus on delivery of the best retirement outcomes for our members. This has been the fund's approach since its inception in 1971. So for over 5 decades, we've grown to be an award-winning profit-to-member industry super fund. We manage over $30 billion in funds under management, of which close to $11 billion is in the My Life, My Money brands. Our purpose is to support members to prepare for and enjoy financial freedom in retirement. So while we've grown considerably and achieved much over those 51 years, our commitment to members' long-term financial security has always defined us as a fund. It is the bedrock that enables us to face the future with confidence and a real sense of purpose. And throughout the whole journey, we've stayed true to our guiding values. We put members first. We do what we say we will do. We collaborate and we celebrate success. Our members provide essential services in sectors such as education, health, transport, aged care and childcare. And our driving purpose is to support our valued members to improve their retirement outcomes. While you're busy serving the community, we're serving you to enhance your retirement outcomes. In the 2022 financial year, we focused on providing members with excellence in super, delivered with care. And as we look back over the year, we're pleased to have a history of industry acknowledgement of outstanding value. Importantly, what this actually means is better value for you, our members, when it comes to your super. Independent rating agency Super Ratings has awarded the fund the highest platinum performance rating as a best value for money fund 15 years in a row. And that's for both our super and our pension products. Super Ratings also named the fund as a finalist in its Momentum Award in 2022, recognised as a fund that has demonstrated significant progress in executing key projects that will enhance our strategic positioning in coming years and better enable us to better serve you, our members. And Catholic Super also received 5 Apples rating from Chant West for 2022. As the highest quality rating a fund can get from Chant West, it goes without saying just how proud we are of this achievement. In other news, we're also pleased to announce that My Life, My Money brands, including Catholic Super, passed the 2022 Australian Prudential Regulatory Authority, also known as APRA, performance test. You might have heard much about the performance test. The annual review benchmarks superannuation funds, my super products, and publicly names underperformers. It's also pertinent to note that another fund with a very similar name, the Australian Catholic Superannuation Retirement Fund, is an entirely different fund to us. It has not connected to us in any way, and it was that fund that did not pass the test. For the 2023 financial year, we will continue to focus on what we've always done well: excellent governance, strong long-term investment performance, and the best possible service and financial advice for our members. We continue to pursue a strategy of further growth as we believe this will position us to deliver even better outcomes for our members in the years ahead. So with those introductory comments behind us, I'd like to hand the discussion over to our Chief Executive Officer, Scott Cameron, who will discuss the fund's achievements in 2022 financial year and the future plans in more detail. So thanks for sharing your insights today, Scott.
Thanks, Danny, and good afternoon to everybody. I hope your day's going well. I do want to thank you for joining us. The 2022 financial year was a year where we really did focus on a program of simplification, consolidation, and also importantly improving investment returns. And while there were positive changes in 2021 and 22, My Life, My Money, like most Australian super funds, did experience the negative impacts of COVID. And we saw inflation rise to the highest level in 30 years and saw the impact of geopolitical volatility on our investment markets. And all of these factors influenced our one-year investment returns for Catholic Super, My Life, My Pension, My Life, My Super, and Transport Super members. And just like it impacted the members of all other super funds across Australia, we certainly weren't immune from that. But under these difficult conditions, we did see it did result in our first negative financial year return for our balanced growth investment option in many years. But it's pleasing that the dedication and the expertise of our investment team meant that we continue to deliver strong long-term performance for you, our members. While our returns were negative in 2022, they did follow very, very strong returns the financial year before. In fact, if you look at the returns, they've been pretty robust since the financial crisis of 2008 and 2009. And importantly, our Growth Plus investment option returned an average of 9.55% per annum, and our Balanced Growth option returned an average of 8% per annum over the 10 years leading up to 30 June 2022. Over the 2022 financial year, there were significant developments at the fund, and I want to just take an opportunity now to talk about some of those. Firstly, we've moved our insurance arrangements to MetLife, which we believe will add considerable value to you members of our fund. The appointment came after an extensive process. It took probably about 18 months, and we took the time to properly assess the options available to us, and that involved looking at the offerings of Australia's leading group insurers. And prior to the appointment of MetLife, the fund had 3 separate insurers. So this appointment to a single insurer has allowed us to simplify and harmonise our operations, and we're confident that that decision will deliver improvements to you, our members, over time. From the 1st of July 2022, we reduced our investment fees for members in most of our investment options. And in fact, for some options, the investment fees went down by as much as 30%. As a profit to member fund, it's really important that we continue to deliver our products and services that meet your needs and adequately equip you for your next chapter, which is why we'll always try to keep our administration fees as low as possible. We also closed 5 investment options within the My Life, My Money suite, with the aim of simplifying our operations to drive down costs and complexity. At My Life, My Money, we're a true partner to our employers. We take that relationship very seriously, and we do see it as a real point of difference to other funds in the market. COVID-19 did present unprecedented challenges, but the silver lining is that it's led us to develop more efficient and effective ways to engage with our employers over the past year. Our relationship managers conducted more than 1,000 employer meetings over the 2022 financial year, and that was through a mix of video calls, phone calls, and also face-to-face meetings. And I think one of the things that we've heard during this time from our stakeholders, be that employers and be it members, is they want us to continue to utilise a variety of channels to engage with us. So that is a silver lining out of this, the last 2 years, is just around how we look at different ways in which we can communicate with you. We partner with our employers to support the superannuation needs of their employees, and that's you, our members, and that collaboration and the use of member demographic information and other member insights really does allow us to deliver tailored services and education programs, and that helps you better control your retirement savings. Workplace presentations continue to be an important element of our overall member service provision. But this year we've put particular effort into providing educational content through the multiple channels I mentioned before. We've been encouraged by our employers. We've recorded seminars and presentations, and that allows you to watch that information at a time that suits you. And that also enables more people to actually receive the useful information about your super. And we know that Australians' work lives are intertwined with their personal lives, and partnering with employers adds value not only through super, but also through insurance, advice, and health and wellbeing initiatives. I wanted to now talk a little bit about some of the other industry developments and the future of our fund. We responded to major regulatory changes throughout the year, including the stapling obligations through the Your Future, Your Super reforms. And the legislation required employers to look up and contribute to the existing super fund of new employees who hadn't chosen a fund. And our employers were equipped with the resources and the information that allowed them to adapt their processes and get great outcomes for their new starters, which is really important from an employee onboarding perspective. The federal government also introduced the Retirement Income Covenant, and that's an important measure designed to focus the superannuation industry on improving outcomes for members who are approaching or indeed already in that retirement phase. And under the covenant, super funds are required to create a retirement income strategy, or otherwise known as an RIS. And you can find our retirement income strategy on our website. And when we looked at creating the RIS for Catholic Super, My Life, My Pension, My Life, My Super, and Transport Super, we aimed to get that balance between the legislative objectives, which was really important, but also the needs of our soon-to-be retiring and already retired members. We do regularly seek feedback from all of you, our members, on a variety of topics, and we knew that this new retirement initiative needed to be led by you and what you wanted and what you needed in retirement. You asked us to explain what happens to your super when you retire, and you told us that you wanted access to one-on-one advice and support, and importantly that retirement is just the beginning of the next stage of your lives. We've always contacted our members who are transitioning to retirement. However, due to the feedback that we receive from you, that valuable feedback, we're now stepping things up. We now reach out to members via a combination of mail, email and phone calls to ensure that you have access to accurate, specific and tailored information. The next 6 months will also see the fund deliver significant improvements for you who are thinking about or already in retirement. So keep an eye out for a number of new initiatives. One of those is our new website with improved investment reporting, updated pension content and personalised information. We're also improving our forms. We're making it much easier for you to complete forms and access tools online. And we're initiating a new program which is designed and dedicated to service our members during the retirement period of their lives. And we're calling that the next chapter, and it will be launched in the coming months. So again, watch out for that. And of course, the website refresh and the upgrade of our online forms and tools will aim to benefit our members, and it's really a turning point for the fund and our service offering. This continued focus on digital services opens up more channels for our members so that you can choose how you want to interact with us and as a fund, but also importantly, your superannuation balance. And we'll also be deploying an action plan to improve employee engagement. Our staff are a key component of our value proposition and also how they deliver retirement outcomes to all of you. And so it's really important that we do support employee retention. And finally, I wanted to talk about a new project that we've been working on for a number of months now. It's called One Fund, and it's really designed to find ways in which we improve our efficiency and we consolidate a lot of the things that we've been working on. And that'll be launched in 2023, halfway through this year. And what it will look to do is we'll, as I said, consolidate, and it will improve our offering. It will provide fee reductions for most of our members, as well as a single set of fees, a single MySuper default product, and a single investment choice menu. The ultimate goal of that project is to improve members' retirement outcomes, and we'll continue to communicate with you about One Fund in the coming months. Look, we look forward to sharing more details about these initiatives with you and to continue the success that we anticipate over the next financial year. I do want to take the opportunity to thank our dedicated team at My Life, My Money, and all of you, our members, for your support, for our staff's tireless efforts, particularly over the last couple of years, which has been, a very difficult time over the pandemic. But we certainly do appreciate your support and the ongoing efforts of all of our valuable staff. I want to now hand over to Andrew Howard. Andrew is our Chief Investment Officer, and Andrew will talk us through not only the investment outlook ahead, but also some key elements of our financial year 22 performance. Andrew.
Thanks, Scott. I'd just like to add my welcome and thank you to you all for joining us this afternoon for our annual members meeting. I have a lot to share with you. There has been a lot going on in investment markets, and I think it's an understatement to say that the investment environment is a very different one to when I last presented to you all in late 2021. More on the investment year that was in a moment. But firstly, I think it's really important that we sort of take a step back and remind ourselves of some of the key principles that feed into our investment strategy. And our investment strategy is very much driven by our investment beliefs. And there's a number on the slide there that you can see on your screen in front of you. I'd just like to draw out a couple of those, and I think with the current market environment, some of these are really pertinent. We'll talk more about these in a moment. But firstly, the importance of diversification. It's absolutely critical in the design of any investment strategy, and it's something that we're very focused on. And also the importance of investing through a long-term lens or a long-term investment discipline. And that's something that's very front of mind for us, particularly when we think about the challenging market environment that we are in, and also importantly, the need to ensure that we avoid reacting at the worst possible time. So the key tool in the investment toolkit is very much diversification. Our investment strategy is focused on generating returns from the widest range of investments possible. And for us, diversification is not only across asset classes, but within asset classes as well. And when we think about the investment markets, really since the end of the global financial crisis, which is now a long time ago, early 2009, it's very easy to be lulled into a false sense of security after many years of record low interest rates. And that really has been a tailwind for equity markets and something that investors have enjoyed for many years now. But as I mentioned at the outset, we are in a very different market environment today. But I think it's really important that some of these key ingredients that go into an investment strategy, they don't change. So if we're going to try and sum up what's actually played out over the course of the last year, I think this slide on your screen now is the best way to sum it up. And what we see here is the extraordinarily steep rise in the official cash rates of both Australia, as determined by the Reserve Bank of Australia, and also the US, which is determined by their central bank, the US Federal Reserve. And as I said, we have never experienced such a severe and material increase in official cash rates ever. If we wind the clock back to the beginning of 2022, the official cash rate in Australia was just 0.1%. And in the US, it was effectively zero. Today, the official cash rate in Australia is 3.6%. And this was literally after only yesterday, the RBA raised rates for the 10th month in a row. Again, uncharted territory by 25 points. And as I say, to that cash rate that we have today of 3.6%. A long way from 0.1%, which is where it was in the first quarter of 2022. And in the US, we have seen the official cash rate today sit at 4.75%. And that's been and so while we're touching on Australia and the US here, that's been a very similar theme across most developed nations all around the world over 2022. So why? What's caused it? Put simply, inflation. We go back to the onset of COVID in February, March 2020, and there was extreme concern by governments all around the world that we were going to see the onset of a very severe global recession. And so what governments and central banks did to try and combat this is to undertake a series of extraordinary monetary and fiscal stimulus to help prop up the economy. And it's fair to say that it absolutely worked and has worked over the course of 2020 and into 2021 and, of course, last year as well. But there is just one thing that really scares central banks, such as the RBA, and that's inflation. The only lever that central banks such as the RBA and the US Federal Reserve have to pull to control inflation is official cash rates. The intention being that by raising rates, this will lead to a slowdown in the economy through reduced spending, and you will see inflation fall. It was early in 2022 in the US, and it was in March in 2022 when the alarm bells really started ringing when US inflation hit 8.5%, and that was a 40-year high. if we look closer to home, the RBA has an inflation target of 2 to 3%. So it has a range that it wants inflation to sit in. Inflation is currently running well above 7%. So we are a long way from where we need to be. And the impact of investment markets in terms of what we've seen play out over the last 12 months has been quite extreme. We've seen extremely sharp falls in both equity and bond markets all around the world. And really, the key point here is that markets do not like uncertainty. And that's something that we're, at the moment, are learning to and have to live with because it's very much with us. And the key question is, how high will rates need to go to bring inflation under control? And there was certainly concerns last year when the chair of the US Federal Reserve, Jerome Powell, came out and said, we will bring inflation back to targeted levels, and the US inflation target is 2%, and I quote, at any cost. And this certainly rattled markets, and it implied that the US Federal Reserve was prepared to raise rates even if it meant that the US would fall into a recession. But what's been quite interesting, and we've certainly seen this in the economic data over the course of the last 2 to 3 months, is that the US economy has been quite resilient. And so one of the things that investors are always grappling with is what is going to be the landing. And what I mean by that is what's going to be the economic landing. Where are we going to finish up in terms of these higher rates? And so you've got, from one extreme being a hard landing where we're going to see a recession and it's going to be quite severe and prolonged, or then potentially a soft landing where economies avoid a recession. And there's actually been a new phrase of late that's been thrown around, and that is what happens if there's no landing. And what I mean by that is that despite the higher interest rates that we're currently experiencing, and they may well go higher from here. In fact, it's largely expected that the US, talking about the US economy, actually avoids a recession. In fact, we see statistics such as unemployment remain at record lows, and economic growth and consumer spending remains at current levels. What all this means, though, is that you see investor sentiment swing from one scenario to the other over relatively short periods of time. So if we think about a bull market where we think markets will go up, and with a confidence that we're going to avoid a recession and the economy will continue to perform quite strongly, versus a bear market where we see sharp falls in equity markets and really pessimism and a fairly gloomy outlook take hold of investor sentiment. So we've got an extremely volatile market environment right now, and a great example of that is actually what we saw here for the Australian market over January of this year. So January of this year, the Australian stock market, as measured by the ASX 200 index, had its best start to the year in over 20 years. You wind the clock forward just 1 month to February, and we saw markets turn quite negative again. So again, we are living with a lot of volatility in the current market, and of course, it's not just interest rates and inflation that have impacted markets over the course of the last year. We've seen the tragic events continue to play out in the Ukraine, and the war's now been going on for well over a year. And unfortunately, there doesn't seem to be an end in sight as we sit here with you today. And that's also had severe implications for the global economy. We're all very familiar with the energy crisis and the sharp increases that we've all experienced with our energy bills over the course, particularly of the last 6 to 9 months. There's also been a material impact in terms of food supplies as well, as Ukraine and Russia actually supply 30% of the world's global exports in wheat. There's also been a severe disruption to the global supply chain as well as a result of the Ukraine war. also in China. So China, over the course of the last year, has seen extreme lockdowns. They do, for the moment, seem to be behind us, and they're opening up again. But the impact on the global supply chain from those lockdowns over 2022 were very extreme, and so it led to impact on supplies in goods and materials all around the world, which of course then led to an impact on inflation as well, as prices began to rise because of limited availability. So the strong tailwinds enjoyed by investors really since the end of the GFC in 2009 have well and truly turned into very strong headwinds as we sit here today. But I think there's a really important point to make here, and periods such as this are nothing new. The circumstances are certainly different, but we have experienced this before. Think back to the global financial crisis of 2008, 2009, or the tech bubble of 2001. More recently, the onset of COVID in March, February of 2020, or even go further back to the crash in October of 1987. And what we need to keep in mind is that following all of these events, we did see markets rebound. So it's a really important reminder that despite the current challenging market conditions, it is critical to remain invested through the cycle, and diversification is key. But when navigating through a period of heightened volatility, we do have a strong focus on ensuring that we maintain asset allocation shape. And volatile market conditions and hysterical headlines can lead to investors becoming nervous. But our view is that volatility can also lead to opportunities. And a great example of this is what we've seen transpire in fixed income markets over the course of the last 12 months. And so 12 months ago, record low interest rates, bond yields at record low levels as well. Turn the clock forward 12 months and we have much higher bond yields today. And for us, that actually provides a buying opportunity. And so we have been increasing our exposure to bonds over the last 6 to 9 months. So again, the investment strategy is not set and forget. We are certainly long-term investors, but we are prepared to take advantage of opportunities as they arise. So increasing exposure to bonds or taking advantage of short-term rallies we've seen in equity markets. So again, as I touched on, the very strong performance of Australian equities in January of this year for us led to an opportunity just to trim that exposure, as we do believe that having a little bit of cash allows us to take advantage of opportunities as they arrive. And importantly, we do believe that being a patient investor will be rewarded in the long term. It is worth touching on the issue of energy in a little more detail. As we've touched on, Ukraine war has had a huge impact on global energy supplies. But the topic of energy transition has received a lot of headlines here in Australia over recent months, and it's nearly a daily conversation in the press at the moment. But I think there's some important points to make here. Firstly, the transition to being fully reliant on renewable energy is not straightforward. The reality is that the energy supply from renewable energy today is not sufficiently developed to meet total energy needs in Australia. There's certainly a positive story with regards to the fact that lower carbon energy supplies are a more cost-effective and economical option going forward. But we are very conscious of how we transition or decarbonise our portfolio without disrupting key industries that both Australia and our export partners are reliant on. Decarbonising our portfolio tomorrow wouldn't solve the climate problem, and we do not believe would be in the best financial interests of our members. We do believe it is important to have a say in the management of those assets to see how they can transition to meet the net zero by 2050 commitments that we've made. And engagement is something that we do undertake a lot through our partners. But we want to ensure As we transition, we create opportunities and support for communities that will be most impacted by the energy transition. Our focus is as much on the decarbonisation of existing assets as it is on ensuring that our portfolio is exposed to assets and companies that will drive the transition and, importantly, build resilient communities and economies of the future. So now turning to performance. The strategy aims to deliver a consistent pattern of returns for our members over the long term. It's important that we provide strong downside protection in markets such as what we've experienced over the last 12 months, but we also participate in the upside when markets are rallying strongly. And the performance to the end of December 2022 has delivered positive returns in all but 2 of the past 10 calendar years. And overall, we've delivered a return of 9.1% per annum over the past 10 years. And look, the past year has been challenging, but we do believe our diversified strategy has held up well against a backdrop of negative returns in both international equity markets and fixed interest markets. And importantly, long-term performance is in line with expectations and well ahead of the CPI plus performance objectives of our options over the last 10 years. I did want to briefly touch on the performance of the Australian equity market, which really has actually been a bit of an outlier compared to what we've seen relative to markets such as the US over the course of the last 12 months. And really, this can be explained by the composition or the makeup of our market, the construction of our index, where we have a much higher exposure relative to other markets to sectors such as resources, energy, and utilities. And all of these sectors have delivered positive returns over the last 12 months, with the resources sector delivering strong returns as a result of the ongoing energy crisis. So in summing up, expect the unexpected in markets. This is not new. This is when we think about investing for the long term, we are going to see the highs and lows over a full market cycle. But the key ingredients that make up our investment strategy to ensure that we deliver a robust investment strategy over time has not changed. It's again comes back to the importance of diversification, adherence to our long-term investment discipline. We want to be able to take advantage of opportunities when they present, but we are not chasing short-term returns. And we believe it's critical to be patient, not react to the short-term noise. And we think if we can do all of this, that will put us in good stead to navigate through these challenging market conditions that we continue to experience today. And importantly, we think that that will help us deliver positive outcomes for our members over the long term. Finally, if you have any queries specifically related to your investment choices, we offer a team of financial planners who can assist. Now I will hand back to Danny for the Q&A. Danny.
Andrew, thanks very much for that really comprehensive update. And thank you, Scott, also for outlining what we'd achieved in 2022 financial year and also what we've got in the water for the times ahead to enhance the member experience. So looking forward to the Q&A, but just before we do that, I wanted to give a big thank you to our dedicated team who've again worked tirelessly through a year of disruption and volatility to serve you, our members. We take pride in taking care of and recognising our people without whom we just could not possibly serve you as well as we do. So throughout the challenges of the last year and those preceding it, our people have continued to focus on our members, yet delivering excellence in super with care. So looking back over the last 12 months, we're just very delighted to have such a grand team available to serve you at each and every corner. So thank you to the team, and I'm sure on behalf of the members who are listening here, they appreciate everything that you've done to look after them. So now the Q&A, if we can. There's quite a few questions. We'll try and get through as many as we can in the time available. We will finish on time, but as I said at the start, everything, all will be the answers to every question, including those we don't get to today, will be posted on the website in early April. Got 2 or 3 for you, Scott, to first, and then I'll throw to you, Andrew, for 2 or 3 as well. So the first question comes from a member who, in accessing information, having trouble seeing the historical balance of the My Pension account. Only the current balance is available. So I'm wondering whether you might be able to help that member for us.
Sure, Danny. Firstly, apologies for the inconvenience to the particular member. They want to see something that they can't access, and I don't think that's an unrealistic expectation that the member has, Danny. So we, as I mentioned before, we are looking at improvements in the way in which we provide content and information on the websites and within the portal, and we'll continue to focus on that. I think in the interim, though, you can actually find that information on the website. We do within your account, within the portal, you will be able to see the historical balances through your historical statements. And so, although we accept that it would be nice to be able to find those, very easily, you can actually find. You can obviously access your current balance easily, but you can find that historical balance information on the archived statements on the website.
Yeah, terrific. Thanks very much, and thanks for the question. I hope that helps. Another couple for you, Scott, before I throw to Andrew. One of our members quite interested in knowing about the donations that Catholic Super might have made during the financial year, and also where they can find out information about that.
Okay, well, I suppose firstly it's important to understand that we don't actually make charitable or political donations. You can, though, find, we do provide financial information on our website, which covers the financial position of the fund, the payments we make, the cash flows, and the financial information for the 30 June 2022 year is available on our fund website. You'll be able to find it there. And there is a shortened version within the 2021-22 annual report as well. But I think the clear message there is that we actually don't make charitable or political donations, but we do have details of our financial position and statements on the fund website.
And often there's public commentary about profit to member funds making such donations. So very important to clear that up, and thanks, Scott. But one other thing that's very much been in the public eye in recent months has been about cybersecurity, and one of our members has right onto this, and they've asked, what steps do we take to protect information in light of Optus and the Medibank cybersecurity breaches?
Yeah, so I mean, I think firstly, we do take the privacy of all of our members very seriously, and protection of your data is a top priority, particularly, and we've always had that approach, but I think it's particularly come to light for people out in the community on the back of some of the cyber attacks that we saw last year with Optus and Medibank. And again, through that process, we looked at those incidents from afar, and we looked at what we do as well. And it's always a time to look at what we can do better as well. I think insofar as the particular, if you have a particular concern about Optus and the Medibank breaches, we can put a payment flag on your account, and that is an added level of protection that we can take. But what it does mean, though, is that if you want to do certain transactions like payments, we might need another level of verification or authority from you, and so that might, on the face of it, mean that it's a bit more of a clunky experience. But I think if you've got that concern, that's well worth the extra steps that we might take. I think more broadly, as far as what we do, we certainly have a dedicated team that looks after data privacy, data security, but importantly as well, we also use external providers and also people who, through our audit process as well, do that quality checking, that auditing of our systems and processes. So it is very robust, and it is certainly front of mind for us. I think there's also, though, some things that we can all do to protect our data, and so maybe a few tips that people can just think about. Certainly, multi-factor verification is really important. I think the use of strong passwords again is important, And look, there's a lot of people out there trying to do the wrong thing by us all. And so when you get unexpected communications, things that you're not expecting, then certainly it's right to be wary of them in this environment. I think updating your devices is really important as well. And importantly, from our perspective, never provide your personal details, and whether that's sensitive information or bank account details, etc., to unexpected communications. Certainly from our perspective, we won't be asking you. We will never ask for your bank account details, etc. So if you've got any concerns with inquiries you're getting from us, then certainly ring us up and check whether they're valid. And if you want information on our privacy policy, that's sitting on our website.
Well, terrific response. Great question, and thank you for that. And also a great reminder, I think, of the things that we all should be doing in all of our personal affairs to try and make sure we protect our data and our security online. Now, Scott can take a break for a couple. I've got a couple for Andrew here. So first one's from a member who had a look online to look at the latest investment report, and it was quite dated. So I just wanted to ask the question about what the currency of information.
Thanks, Danny. Look, investment performance on our website is updated monthly, but there can be a short delay between when monthly performance returns are calculated and finalised and when that information goes live on our website. But certainly the intent is to make sure that we keep it as current as we possibly can. And importantly, if you would like more frequent updates on how our investment options are tracking, our unit prices are updated daily and can be viewed on the website.
Thanks very much, Andrew, and thanks for the question to our member. Another one for you, and we've got seen reports in the media about how Catholic Super doesn't have good performance and didn't pass the government's performance test. This member may well have been very attuned with my comments earlier, but would you like to respond to that, please?
Yeah, thanks, Danny. And I think another opportunity just to absolutely categorically confirm that Catholic Super has passed the APRA performance test since over the first 2 years since its inception, and really can absolutely say that there is no connection to Australian Catholic Super. And so when you see those media reports referring to Australian Catholic Superannuation and Retirement Fund that has failed the performance test, that is not the Catholic Superannuation Fund, and we have well and truly passed. Danny.
Thank you very much. Thanks for clearing that up, and thanks to our member for raising that area. It's very hard when the names are very similar to reach out, especially when the media might just summarise the name. Another question for you, Andrew. We have a question from a member who's asking whether we'd ever consider an index option.
Yep. Well, very timely, because I'm very pleased to be able to share with our members that we will be launching a new index option, low-cost option, which will become live on the 1st of July of this year. So it will be a diversified option. It will have 70% in growth assets, so things like equities, and it will have 30% in defensive assets, so cash and bonds. And so the underlying construct in terms of what makes up this option, it will be comprised of low-cost index or passive strategies. And we see this option as being a great complement to the existing option suite, and will appeal to members who are looking for that low-cost option.
So really responding to some of the requirements of our members, the emerging needs and some of the change markets. So that's great news, and thanks very much for the question. Another question, which has covered a lot of ground in the papers in recent days. I've heard the government is looking to increase tax on superannuation and contributions, and wondering whether we could explain this. Scott, would you be able to respond?
Sure. Well, just when we thought that I think we had a bit of a holiday from changes to the legislation, this one probably surprised us a little bit. And look, under the proposed changes, if a member has over $3 million in superannuation, then the earnings in their super account will, the amount of the earnings referable to that excess will be taxed at 30%. Which is different to the current 15%. So that is the change. I think it's important to understand a couple of things with the change. The first is that it's unlikely to affect the majority of Australians. In fact, it's more than just the majority. I think more than 99% of Australians will be unaffected by this change. I think the other thing to note is that it's not proposed to come into play until the 1st of July 2025. And the other thing is that it's currently in a proposal stage. It's yet to go before the Parliament, etc. So, look, we'll be keeping an eye out as those changes make their way passage through the Parliament. But as I said, it is on the excess over $3 million. That's where the higher rate kicks in. And equally, it's only going to affect a very, very small portion of Australians.
So, terrific question. We'll keep our members up to date. And we're only reflecting earlier today that the one thing we can be certain of is more change. So we'll keep you updated as we go through that. Another very, very topical question, which Andrew did start to cover during the update, was coming from a member, what is the fund doing to address and help manage the energy transition? So would you be able to unpack it a bit more, perhaps, for our member there, please?
Thanks, Danny. Look, it is extremely topical, and it's something that I did touch on in my earlier remarks. But just to reiterate, when we're considering issues like the energy transition, our focus is on what the impact may be with regards to the best financial interests of our members over the long term. And certainly, again, as we touched on, energy markets have been through a significant period of turmoil in recent times, which further highlights that the changes needed may not be linear, so may not be in a straight line. And this means that there is no one-size-fits-all with regard to how we approach this and what the solution might be. But for us, we tackle this from a number of angles. Firstly, we work very closely with our investment managers to ensure that they are taking into account aspects such as the energy transition, climate change, in terms of the impacts of that over the course of the next decade and beyond, and it's incorporated into their thinking and, importantly, into their decision making. Secondly, we're very much looking to invest in the assets and companies that will either contribute to or benefit from the changes that will happen across the market over the next decade and beyond. And this includes through our allocation to unlisted low carbon technologies and renewable energy infrastructure. And thirdly, we do look to work with our engagement partners and industry groups to encourage change at both a company and regulatory level that will drive the transition away from carbon-intensive energy sources, whilst also supporting resilient and affordability in the energy market. And again, so fundamental changes, I think it's fair to say fundamental changes are needed across the energy market to reduce this sector's contribution to climate change and improve access to affordable, reliable energy, both here in Australia and around the globe. Delaying this transition won't help, but as I mentioned earlier, we can't achieve this overnight. So it's very much a balancing act and one that we'll continue to focus on and consider going forward.
And I think, Andrew, one of the other points, we're very clear about our investment beliefs. I think that Andrew outlined earlier. We're also very clear about our values. We do what we say we're going to do. This is important. We believe it, and we're following through, I think, as Andrew's explained. But thank you to our member for the question around that really topical issue. We're certainly with you on this. Look, probably got time for one, maybe two questions, but Scott, we might just pass to you for this one. A question from a member, I say, after the joint venture between Equip and Catholic Super, they noticed a whole lot of media reporting about further merger activities in the super industry. Would you like to comment and give an update to a member about that?
Sure. Look, there's been a lot of mergers and consolidation in the industry. I think between the government and the regulator, that is an objective they're trying to achieve. And we, as a fund, certainly believe that consolidation has benefits, and I think the growth that we've achieved over the last few years certainly has benefits, and hopefully we've explained quite a few of those today. It is true that there's some more in the wings out there. I think our focus has been over the last 12 months to really consolidate and bed down, as we've talked about, a lot of the growth that we've had as a fund. And so, again, My Life, My Money came into the broader Equip Fund back in late 2019. That was when the joint venture occurred. But even since then, we've had a lot of growth in the broader the broader fund with Toyota Super joining us and BOC, Gases, Pitcher Partners, etc. So we've had a lot of growth in that sort of 3-year period, and we have been spending the last probably 12 months on really consolidating and embedding that to deliver the benefits that we talked about to our members. Having said that, we think that there is still benefits of scale that can be achieved, and so we're always on the lookout for those opportunities. But look, at the end of the day, they have to be for the best financial interests of our members, and that's all of our members out there listening to this today. That's the decision, that's the lens we look at these things through. So look, as I said, the focus has been on bedding down the considerable growth that we've had over the last 2 to 3 years, including the joint venture between Catholic Super and Equip, but we do see benefits of future scale, and we'll consider to look at the right opportunities when they come.
Wonderful. Thank you very much, Scott. We'll squeeze one last question if we can. I'm very conscious we'll finish absolutely on time. This is to you, Andrew. Does the fund invest in crypto? If not, why not?
I can be quick here, Danny. Look, we don't invest in crypto, and if I think back, we actually had a very similar question back in late 2021, the last time that we spoke to you. And look, the reality of the cryptocurrency market is that it's extraordinarily volatile, and it's very difficult to actually understand what is driving the underlying value of that investment. And I think at the end of the day, if it's too difficult to actually determine and understand what's driving the value of an investment, then it's one very much that should be avoided. And I think the other important point I'd make here is that it's not a regulated market. And so without that sort of regulation that we really want to see in terms of the investment markets that we invest in, then it's certainly not one for us at this point. I think it's fair to say, Danny, it could be a little while before you see crypto in our portfolio.
Fantastic. Look, thank you very much, Scott and Andrew, for the response. And thank you to our members for the questions. It's time now that I close the meeting. But before I do, I just want to reiterate that as a fund, we're here to help Australians grow their super. We're here to help make sure that you have the best retirement possible. And we do aim to deliver those strong long-term investment returns and keeping fees as low as possible. And we look to deliver great member services and advice you can trust. I want to thank you for having the opportunity to serve you by looking after your retirement savings both now and in the future. Now, as mentioned earlier, the minutes from this meeting and the written responses to your questions, including those we didn't have time to address today, will be available on your fund's website in April. If you have any questions about today's meeting or about super generally, then please call your fund's helpline. We're open between 8:30 a.m. and 6 p.m. Australian Eastern, Monday to Friday, and the phone numbers are as listed there on the screen. So that concludes our third annual members meeting. It's been a great privilege to chair it, and on behalf of the board and my colleagues here and the whole management team, I thank you again for your time. It's a pleasure to serve such an engaged and loyal membership base. I hope you enjoy the rest of your day. Take care.